My name is Jasel Chauhan. I'm a partner at Hill Dickinson here in Athens, in Piraeus. Hill Dickinson is a law firm that's been here for 25 years, and notwithstanding Brexit, hopefully another 25 years to come as well. I will just now very briefly introduce the panelists that we have, and hopefully Frans will join us fairly shortly. We have an excellent panel today, and just to introduce everyone very briefly, we have Danai Kotsia from ABN AMRO, Vassilis Maroulis from Citi, Frans van der Bospoort will hopefully be joining us shortly from DVB, and actually in a slight change to the scheduled program, we actually have Bernd Passmann from DNB. I was going to make a joke about a last-minute transfer, syndication, sub-participation, but I was advised against it, and I promised not to make any more finance jokes for the rest of the panel. With that, we'll go straight ahead, and I think we'll start with a nice, easy question. And as usual, I think we'll start with an overview from each of the bankers on the panel as to how the previous year went for each bank and how each bank sees 2019 and the year ahead. Danai?
Thank you, Jasel. 2018 was a good year for ABN AMRO. We continued with the expansion of our loan portfolio, and we did not face any significant issues that allowed us to generate a healthy return. For 2019, ABN AMRO, as well as all other financial institutions that fall under the supervision of ECB, are expected to be faced with a number of challenges. Such challenges include the implementation of Basel IV, the IFRS 9, and the increased supervision we see from the regulator, not only on the capital side, but also on the compliance side. Albeit these challenges, and on the positive side, ABN AMRO will continue to remain active in ship finance, aiming to maintain its role as one of the leading European banks. Focus will be primarily on the existing clients, without, however, excluding the possibility of expanding our client base. Currently, the bank is examining all parameters, and it's making investments, and it's taking any step necessary in order to create a future-proof bank, as we call it, steps that will not only address the issues of the past, but they're expected to allow the bank to remain active for the years to come.
Thank you. And on that, I think one of the things to note that everyone on the panel today has certainly been a supporter of finance, and certainly ship finance in Greece for the last 10 years, 10 years being the anniversary of Capital Link. And I would like to think that for another 10 years to come as well.
Hopefully, yes.
And I'll pass the question down to Vassilis.
Thank you. I think 2018 was a good year. I mean, clearly Citibank has its issues, and we have surpassed the financial crisis, which was a decade ago. So we have continuously been growing the portfolio for a number of years. And this will continue to happen, of course, being extremely selective with regards to clientele, but ultimately the growth of the portfolio will continue in an accelerated manner. With regards to the segments, I think I'm cautiously optimistic. I think even on the dry side, which has seen a precipitous fall in rates in 2019, I think hopefully will be something that balances out. And all the other segments, tankers, LNG, even containers, it's a cautiously optimistic sort of landscape, of course, with the exception of offshore. So as a result, I think the bank is in a view or expansionary mode. I think we clearly have a regulatory regime for all banks, which is very specific, extremely tight, but at the same point in time, Citi, being a U.S. institution, has gone through everything that I think many of the European banks are going through we've gone through this a decade ago. So therefore, we are in a phase where I think we know how the landscape is and therefore can navigate around it to position to effectively assist our clients in growth and anything else that they need.
Thank you, Vassilis. And Frans, if you manage to catch your breath, I'll pass the question to you now.
Yeah, sorry. Unlike our colleagues from ABN AMRO and Citibank, of course at DVB we have no issues at all, apart from the small fact that we are for sale. I think 2018 was as good year as it can get for us. We did about 1.6 billion of new deals, of which about 30% in Greece. Greece is by far our most important and largest part of the portfolio. As some of you know, we are the second largest lender in Greece, with a lot of good and loyal clients. In terms of 2019, we have a budget, it's less than in the past, but our shareholders still support us very well. We're open for new business. We hope to do the same as we did last year. For DVB, where we are in the cycle, as a shipping bank, soon to be our own remaining activity, after we have sold off the land transport and aviation activities. We try to be cyclical neutral. For us, it's more important that we choose the right counterpart and finance the right assets, and not so much where we are in the cycle.
Thank you. Well, for DNB, we went in 2017 and 18 through a kind of a program to kind of rebuild our capital base. And last year, we actually kind of successfully managed to meet all our return targets. If you look at trends in deals done, I must say it was like the majority were second-hand financings, either purchasing other second-hand vessels, refinancings, taking other banks out, but also a number of scrubber financings. Looking for 2019, there's a very good pipeline. There's quite some deals in documentation stages, so this promises to be a good year as well.
Okay, thank you. And I think even actually from a small panel of banks, it's quite interesting how there's actually a very different perspective as you do go from bank to bank, and the different views, the different problems being faced. Which also actually leads me quite nicely onto the next question, which is, it's clear that ship finance and bank lending has changed beyond all recognition over the last 10 years. Loan portfolios are reported to have dropped up to $10 billion in the last 3 years alone. So in that context, how have the traditional long-standing ship finance banks adapted to the current market? And has that been reactive or proactive? Vassilis, should we start with you on that?
I think it has been reactive. I think, well, it's clearly indicated by the fundamental decrease in availability of bank financing that it has been reactive. It's the portfolios that had been built up leading to the financial crisis were effectively unsustainable both from a return to the corresponding shareholders. The pricings that were provided were unsustainable. The volume that was provided was equally as something that the corresponding banks could not support, and as a result, they had to shift models completely. With regards to where we are in terms of, and I think that's why Citi has been here for over 60 years, and from a shipping point of view, we have been a franchise which is in excess of 70 years globally. It's because we are corporate financiers which take additional security, if you wish, in the form of vessels. And that is something that we continue to do, and we did it when before the financial crisis and we're doing now. So I think it's probably where things are sort of changing, especially with Basel IV and multiple other things which reduce materially the capability of banks to reduce the risk capital that a corresponding loan is utilizing on the bank's balance sheet. So I think all in all, it was clearly active. Maybe some banks overshot and as a result created for some problems and for others opportunities. At the same point in time, I think, at least with regards to our institution, we have always been consistent of never being an asset financier.
And following up on that as well, I mean, one of the things that obviously Michael Parker from Citi had also mentioned is that he sees that potentially traditional bank finance will potentially disappear. It will become part of bigger projects involving corporate finance or larger energy projects. Is that something that you see as well? That shipping is becoming part of a bigger piece?
I think shipping has always been part of a bigger piece. I think there will always be a need for independent shipping operators, for which Citi will always be providing financing. At the same point in time, it is indeed the case that many companies are continuously becoming larger and larger, part of larger projects, and as a result, financing of those assets, those shipping assets, will be taken into consideration together with the project as a whole. And I think that's what Michael was saying. There will always be a need for financing the corporates that operate in this space. But and as I said before, that's what we do. We do not finance. If it's 50% LTV, does it work? No, it doesn't work if the corporate is, as far as Citi is concerned. For other banks which have a different mentality, maybe that is the case, but that's who we are.
And it kind of brings us back to a slightly different point as well. And I mean, these days the market has changed considerably. I mean, what really is traditional bank ship finance these days? I mean, you mentioned, whether is it lower leverage, higher margins, bigger clients, bigger deals? I'll leave that question open.
Yeah, I think that's to be defined for each bank by itself. Every bank has a sweet spot. I think the market as such is very large. I mean, we're talking about a volume of an annual volume of 80 billion US dollars, of which between 55 and 60 billion each year is refinancing of balloons maturing, and 20 to 25 billion is new building. Purely talking about, let's say, traditional shipping bank finance. Yes, that's true. The share of, I think the share of senior loans over the years has gone down quite a lot, from about 55% in the past to 40 now. But we're still talking about huge numbers, and I definitely think there's a big space for, as you describe it, traditional shipping finance. How that works in the model of each bank is different. I mean, Citibank has a different model than we have. I think we are a bit more hybrid. Obviously, we look at the corporate behind it, at the recourse, but we are also paying a lot of focus and attention on the assets we finance. And I think there's obviously there's the tier one, the bigger listed large corporates, which all the banks are chasing against very, very low margins, hoping to do a bit of cross-selling, which is not always possible. And there is, I think, in my opinion, a very interesting, let's say, layer beyond that, the second tier, which in terms of risk is not necessarily worse, maybe sometimes even better, and where the risk reward is a bit more attractive for, at least for us as a bank. If you look at the type of companies we are financing, is mainly family-owned and private companies, which is about 55% of our portfolio. Only 20% of the companies we finance are listed and considered a bit larger corporates. So it's a different model.
What I would like to add here is two things. First of all, the traditional bank financing is not per se defined by the level of leverage or the terms that each bank provides. I think apart from the years 2002, 2008, where we had seen extreme situations, the terms were not very different from what we see now. Secondly, we see a tendency towards corporatization of the companies and of the type of companies that the banks choose to finance. This is something, first of all, that has started a few years now. And secondly, it's something that is also derived by the upcoming regulations and determined by the new regulations. And the last thing I want to add is that the traditional bank financing has to do not only with the terms that you obtain at the beginning, but at the service you get throughout the life of the loan. Because, yes, it's important to derive the terms at the beginning, but then again, with shipping being a cyclical industry, there will be inevitably some points in time where the loan might need to be seen in a different way. Some restructurings need to be made. So I think the distinction for traditional bank financing or not has to do also with the way that the banks treat, let's say, and see and address these issues until the end of the loan.
And you mentioned an important point there on the regulatory side, which it's certainly something that is going to be more at the fore in relation to the traditional banks. And I'll come back to you on that as well. But one thing when we are now looking at traditional finance, it's interesting to see that even at today's conference, from years where there has just been the one traditional bank finance panel, we today we have three. We have an alternative finance panel to follow this, and a new bank finance panel to follow that. So that leads me then to the question of competition. It seems, which is hopefully a good thing, certainly for the Greek market, that there is there's a much wider kind of pick and mix of options. There's bank finance, private equity finance, new smaller banks coming through, equity investments, joint ventures, sale and leaseback, and certainly the Chinese leasing that certainly has a strong presence today. So how do the banks view this variety of options, and does that present more challenges, or is that something that's helpful?
I think it's very positive. It's of course positive for the shipping companies that they have more options. It's also positive for the risk profile of companies, that there's more liquidity sources, that they're not just dependent on one bank or another two banks, and one of these banks falls away, so who's going to refinance the balloons? And we also see it in a way as an opportunity, a business opportunity, to help some of our clients go to the bond market, go to the Chinese leasing market, or go to alternative sources of fund. And all these sources, they're not, where the sweet spot of most of the banks is. They all seem to have their own spot. It's hardly ever that we're really competing for the same deal with these funds, because they're either more expensive, or the client wants to have an 80-90% loan to value. So they're supplementary.
That's Vassilis, that you would see?
I fully echo that. I do not consider either the alternative finance or the leasing houses, or in any sort of way competition. I mean, it's actually very positive that those sources of funding are available to the whole of the Greek shipping industry and the ship owners, and also including our clients. I think it's very positive, and ultimately do not consider them in any shape or form competition. I think they're very welcome, and ultimately the capital that they provide has been over the past few years extremely helpful. So to many companies that wanted to grow when during the financial crisis or immediately after the financial crisis, where there was no bank financing almost available. So I think it's great to see them here. It's great to see even more, and ultimately, if it works for the corresponding companies, then that's great. Ultimately, people have to do their calculations and figure out what they need. So I welcome their presence and the capital that they provide, and as I said, not in any way, shape or form do I perceive them as competition.
No, and I think to some extent in that way, there's probably been actually quite a lot of cooperation between a lot of the newer parties. For example, where leasing houses, private equity have gone for more structured deals, that often we are seeing more and more that there is, if you like, traditional bank finance behind that, putting a mortgage on the ship and perhaps, say, financing, at least in the first counterparty stage, the private equity firm on lending to shipping, or potentially the leasing house who then mortgages their vessel. Is that something actually that almost seems to show a joining of forces and perhaps an adjustment of the traditional bank finance position, that actually lending to maybe a more institutional investor is something that is a change? Is that something you've seen at all, Frans?
Yeah, definitely. I think I can vouch for that. As you know, we work a lot with PE houses. We work with around 50 to 60 different PE houses within our shipping and aviation platform. We try to cooperate as much as possible with Chinese leasing, our Chinese friends, although they're extremely demanding on pricing, but okay. We have done quite a number of interesting transactions with them. And same in Japan. We have a small outlet in Tokyo, and I think we are a bank which is extremely active in JOCO financing, arranging and introducing that to our international clientele by putting that product together and provide the debt and source the equity. So I think it's indeed all complementary to each other.
And Baron, is that something that you've seen as well? A lot more cooperation with different types of parties to finance the shipping market?
Yeah. I mean, of course, private equity firms, not the private equity firm themselves, but their portfolio companies. We also have been financing Nordic leasing houses, and we can finance kind of the Asian leasing houses, but as Frans said, like they have also access to very cheap internal, sometimes intra-group funding, so they usually go for cheaper sources.
Now, move on slightly to be more specific to, I think, the Greek market. In 2018, Greek owners once again topped the rankings as the most active buyers in the second-hand market. How do banks view the continued level of investment, fleet expansion, and renewal by Greek owners? Certainly, this is something that I would ordinarily expect to be helpful, and certainly in terms of specifically being able to lend more to the Greek market, presumably this is something that is quite key.
As a Greek, I'll comment. Long may it continue, and it's extremely. One is very proud for the achievements of the Greek ship owners and what they achieve on a day-to-day basis. The fact that they have managed to do what they have done and to continue to grow in the face of all this adversity, an amazing achievement. With regards, as a shipping financier, I would say that over-ordering is not something that ultimately, in most occasions, with very specific examples which have been the opposite, which we have seen a collapse in demand, in most occasions shipping cycles are driven by oversupply. So the Greek shipping facts, which is the largest commercial fleet and ultimately the growth that we continue to see year after year, it's something that should make everyone in this room extremely proud, and longer may continue.
Okay.
What I wanted also to add is that I agree totally with Vassilis. We view that very positively. Obviously, over-ordering is not something that has helped the shipping markets throughout, but apart from increasing the fleets, we consider that there is a need to renew part of the existing fleet in order to be prepared for the new regulations, to support the new environmental concept, and this is something that is viewed very positively, specifically by ABN, who has very much focus on the sustainability side.
No, and certainly, part of the focus on fleet renewal has been, certainly to address those aspects, and as well as the regulatory aspects for shipping and Greek shipping. Obviously, there's been certainly larger expenses, scrubbers being a hot topic as well. But going to that point, in terms of whether we're talking about more our environmental concerns, there's certainly a lot more regulation than there ever used to be, and I think that's probably most acute in the banking sector. So there will certainly be the kind of the finance regulations, ECB regulation, Basel IV, and these types of things. But then that's also combined with, in effect, shipping regulation. So it almost seems to be a double whammy of regulation in that sense. So, Danai?
It is indeed the case that we are in a point in time where both banks are faced with increasing regulations, increased supervisory from ECB. This is going to affect a lot, not only the asset capacity of the banks, but we may see new strategies, new implementation of new systems, etc. At the same time, the companies need to apply the new upcoming IMO regulations, and they need to adapt to that. I think shipping is entering into a new era where all stakeholders will need to reevaluate their strategic directions. Some even take a new direction. ABN AMRO believes that sustainability is going to play a very big role, if not the most important role, within this new era. But what is to say is that we are now in an era of a lot of challenges, but challenges do not only mean new problems. Challenges can create new opportunities. So the increased regulation that we see now to the banks might lead to more efficient operations, better control, and inevitably stronger and financially healthier institutions. At the same time, the new environmental regulations, we might see new products and new financing opportunities. From the side of ABN, we have sustainability ranking very high in the priorities of the bank. It's one of the bank's strategic pillars. The bank is taking initiatives on that front for a number of years now. What we would like to do going forward, and we intend to do, is to work more closely with the companies and with our clients in order not only to increase awareness on this topic, but also to help our clients materialize their investment strategies, their sustainable investment strategies.
As the clock starts to tick, I usually do like to kind of try and finish on a positive note after a bank finance panel discussion, which over the last few years has been a bit more difficult than I would have liked. But seeing that today's a sunny day and clouds are always around the corner, I'll ask a slightly tougher question. You've mentioned some of the regulatory issues, and certainly there's always things around the corner that seem to be the threat for the next 10 years. So, at this point in time, there's nationalism, protectionism, the Trump effect, Brexit, trade wars, real wars, sanctions, cryptocurrency. What is the next biggest threat to traditional bank finance? And I'll throw that open to the panel. On that cheery note. Who wants to take that one?
I'll take it. Look, all of these things, we have been faced over the past few years with unbelievable challenges, and both our clients and every bank here has faced them. So I don't believe that any of these some things you will need to adjust. You need to adjust. There are winners and losers in change when change happens. At the same point in time, I think if there is one thing that is, I think potentially there to create major issues for traditional shipping finance and bank portfolios is over-ordering. I don't see all the other things that have been mentioned as something that potentially creates something that is unsolvable. The element of over-ordering and effectively killing off markets is on the back of being driven by fundamentally the actions of the clients of the banks. I think that is a different story.
Which is interesting, and to some extent probably a theme of the last 10 years that over-ordering, oversupply has been probably one of the biggest issues, and it seems to remain that way.
Yeah, I think for us, I mean, all you say is right. I mean, those are market input, market forces. But for us, especially for a smaller bank, I think the technology changes, the IT, the fintech, which is extremely important, but for a smaller bank is quite difficult to be up to speed to that. I think personally, what I find the biggest threat and where there's still a lot of improvement possible, especially here in Greece, is on transparency, and then it caters a little bit back to the discussion on regulators. I think nowadays, I've seen quite a bit of improvement over the last few years in terms of transparency. I mean financial transparency, but there's still a way to go, especially in the segment what I described earlier, and that will make our lives and ultimately also the lives of our clients much easier, maybe even by lower margins.
And I think probably one of the more positive things to take from it is that after 10 years, I think all of the banks on the panel are still here. So I think that's probably testament to sticking with it, and certainly something that is good for the Greek market.
That's what I was going to say, that the four banks in the panel have survived not the last 10 years, but they have survived the craziness of the previous decade. So I think what is important is to remember the lessons of the past, and challenges will always be there, threats will always be there. That's how the world is, but I think if we always remember what was done wrong and try to avoid it in the future, we will all continue to be around.
Okay, thank you very much. I think as time is now against us, I think if there are any quick questions from the audience, I'll throw it to the floor. Okay, in which case we won't throw it to the floor, and just give me one last chance to thank each of our panelists and also Nicholas again, and I'll hand back. Thank you very much.
I would like to thank you for a great panel. I'm delighted to look at this full room right after lunch. So obviously the interest is there, and thank you very, very much. Thank you.